Vinfast has decided to invest a whopping $200 million in India as part of their world domination plans, so where exactly will this money go and should you buy the stock? Keep watching for the next 10 minutes as we take you through the details, but before we do that, subscribe to our channel $1 World for regular EV stock updates. Vinfast, the Vietnamese electric vehicle EV manufacturer, is actively pursuing a global expansion strategy, and one of its potential destinations for setting up manufacturing operations is the Ford India factory in Chennai. This move signals Vinfast's commitment to tap into the burgeoning Indian EV market, and it's a development that could reshape the automotive landscape in India. Vinfast is considering several options for its entry into the Indian market. One of the most prominent alternatives is the acquisition of the Ford India factory in Chennai, located in Tamil Nadu. This manufacturing facility has a substantial capacity, capable of producing 210,000 units annually. However, Vinfast, known for its pragmatic approach, is likely to commence its Indian operations with a smaller capacity that aligns with the current stage of EV adoption and demand in the country. This strategic decision is cost-effective and mirrors the company's focus on sustainability. Initially, Vinfast may start by importing fully assembled EV units and knockdown kits, following a top-down approach. This approach allows them to gauge market response and gradually transition to local manufacturing later in the decade. By beginning with imported units, Vinfast can quickly introduce its EV models to Indian customers while establishing a local manufacturing base. This strategy also mitigates the risks associated with building a greenfield facility from scratch. While the acquisition of the Ford factory is expected to be more cost-effective than starting anew, Vinfast is exploring various alternatives in Gujarat and Tamil Nadu to ensure the optimal location for its operations. The company is considering a minimum manufacturing capacity of 100,000 units, with the possibility of expansion as demand grows. The initial focus may be on the top-tier market segments, but Vinfast anticipates that the majority of future volumes will come from the Core B segment, aligning with market trends and consumer preferences. Vinfast's entry into the Indian EV market is in line with the broader global trend of investors seeking opportunities in the booming electric car market, particularly in low-cost, high-volume Asian vehicles produced by Chinese automakers like BYD Auto, Great Wall Motors, and SAIC. Vinfast, listed on the Nasdaq, has already enjoyed significant success in its home market of Vietnam and expanded its reach to the United States and Europe. This expansion includes sales in countries such as France, Germany, and the Netherlands, where the company offers a range of EV models, including the VF E34, VF8, VF5, and VF9. One of Vinfast's notable offerings is the VF8, a global market electric SUV available in two versions, Eco and Plus. With its entry into India, Vinfast aims to leverage the matured automotive component ecosystem in Tamil Nadu and the fast-emerging EV components manufacturing sector in the state. This not only streamlines its supply chain, but also aligns with the Indian government's push for localized production of EV components and vehicles. Furthermore, the strategic move by Vinfast to manufacture EVs in India aligns with the increasing global focus on sustainable transportation solutions. As the world transitions towards electric mobility, India has become a key battleground for automakers looking to establish a foothold in the EV sector. Vinfast's entry promises to intensify competition and accelerate the adoption of electric vehicles in the country. Increasingly, over the past 5 years, a significant number of key employees from Ford India's manufacturing and business operations have transitioned to Vinfast. This migration coincided with Ford's reduction of its presence and exposure in India. While Ford is considering the sale of its Chennai plant, it remains open to the possibility of re-entering the Indian market through the import of completely built units, or CBUs, or the assembly of completely knocked-down kits, or CKDs. In conclusion, Vinfast's exploration of the Ford India factory in Chennai as a potential manufacturing base in India represents a significant development in the automotive industry. As India's EV market gathers momentum, Vinfast's strategic entry is poised to make a substantial impact. The company's commitment to sustainable mobility, coupled with its track record of success, positions it as a formidable player in India's electrified future. With a focus on affordability, efficiency, and innovation, Vinfast has the potential to reshape India's automotive landscape and contribute to the country's clean energy transition. Enjoying the video so far? Be sure to join our Discord community to connect with other like-minded investors. Let's dive into the Vinfast stock price actions. As of October 9th, 2023, Vinfast Auto Ltd, or VFS, is a Vietnamese electric vehicle manufacturer that recently made its debut in the public markets through a special purpose acquisition company, or SPAC merger. However, the company's stock has shown considerable volatility since its initial public offering, and in recent months, it has experienced a downward trend. Despite these challenges, Vinfast holds significant promise. It benefits from the robust backing of its parent company Vingroup, one of Vietnam's largest and most influential conglomerates. Furthermore, Vinfast has strategically formed partnerships with prominent industry players like BMW and Bosch, further solidifying its position in the electric vehicle sector. Nevertheless, Vinfast operates in an increasingly competitive market for electric vehicles, facing stiff competition from established automotive giants and emerging startups alike. In addition to the competitive landscape, the company contends with supply chain disruptions and rising operational costs, which have added complexity to its growth trajectory. Vinfast stock remains susceptible to fluctuations as the company navigates these early challenges in its journey as a publicly traded entity. While it is a promising player in the electric vehicle industry and has garnered attention for its potential, it is still in the early stages of development. Investors should be aware that the stock's performance may continue to exhibit volatility in the short term as the company works to establish its position in the global electric vehicle market. Vinfast's long-term success will likely depend on its ability to effectively navigate these challenges, capitalize on its strategic partnerships, and execute its growth strategies in the ever-evolving electric vehicle landscape. On the other hand, Vinfast Auto, or VFS, has seen a significant decline in its shares this week, with a staggering 36.7% drop through 10:25 a.m. Eastern Time on Friday, according to data from S&P Global Market Intelligence. This sharp decline has brought the electric vehicle stock, which had an impressive debut in the US back in August, down by 90% from its peak value. Despite reporting robust growth in deliveries and revenue for the third quarter on October 5th, some investors continued to sell off their Vinfast Auto shares. In its first ever quarterly earnings release since going public in the United States, Vinfast Auto revealed some notable figures. Electric vehicle deliveries showed a 5.2% sequential increase, reaching 10,027 units, while e-scooter deliveries surged by an impressive 170% sequentially, totaling 28,220 units. Additionally, revenue witnessed a substantial 159% increase, reaching $342 million. However, while the gross loss decreased by 28% to $102 million, the net loss grew by nearly 34% to $623 million. Vinfast Auto is a relatively young company that introduced its first EV in Vietnam in late 2021 before expanding into the US and European markets. In Vietnam, it offers several SUV models, including VF8, VF9, VF5, and VF E34, along with two e-scooter models, Feliz and Evo. Presently, only the VF8 SUV is available in the US in September. Vinfast Auto launched the VF6 SUV in Vietnam, with plans to start taking orders from October 20th. This SUV will also become available in the US, Canada, and Europe. Despite its strong growth in sales numbers, the question arises as to why Vinfast Auto's stock is plummeting. The primary reason is the release of over 46 million ordinary shares that were previously under lockup agreements. Shareholders holding these securities have been selling a substantial portion of their holdings this week, leading to a sharp decline in Vinfast Auto's stock price. It's crucial to note that Vinfast Auto has a very limited number of shares available to the public, with less than 1% offered during its initial public offering. With the founder owning more than 99% of the shares, the stock is inherently volatile. Looking ahead, Vinfast Auto has provided guidance, expecting to deliver 40,000 to 50,000 EVs this year, commence deliveries of VF7 and VF3 models in 2024, and plans to establish factories in India and Indonesia to expand its global presence. Given these developments, Vinfast Auto remains a potential EV stock worth monitoring, as long as investors are prepared for the associated volatility. Remember that this is not financial advice and you should always do your own research and make informed investment decisions. That was all for today. Let us know if you think the stock will make you rich or not in the comments section. Hit like and subscribe to our channel $1 World for more such penny stock videos, and we will see you in the next one.